So this video series is all about long-run growth, and basically we're talking about the question of why some countries have gotten rich and other countries haven't. And first thing we're going to go ahead and look at is basically most of the time, for most of human history in most places, people have really just been incredibly poor. Now, how are we going to measure this? The way we're typically going to measure this is real GDP per capita. So we're going to use real GDP, so we're taking out the effects of inflation. And I think it's sort of mind-boggling how much real GDP per capita varies across countries. And just to make sure we're clear here, what we're talking about in this lecture series is long-run economic growth. And when we talk about long-run economic growth, we're talking what's the average growth rate over a 10, 20, 30-year period, 100 years maybe even. So here's a big giant table of data, and we have a whole bunch of countries here, and we can see their real GDP per capita, and you can see the US is kind of up here, not completely at the top of the charts here, but pretty up there. I haven't included every single country in the world, clearly, but just sort of a good sampling of countries that you may have heard of. And you can see that, while the US isn't totally top of the charts, even compared to most other rich, fully industrialized countries, the US is pretty up there. One way of looking at it is if you sort of take the US GDP and figure out what fraction US GDP being, if we called that 100%, most other rich countries have GDP that's sort of 70 to 80% of US GDP. And those are other rich countries in the world scheme of things. Down we have some middle income countries here. Some countries in Latin America, Russia, Mexico, if you sort of do the math on that, income per head in Mexico is about 1/3 of what it is in the United States. But kind of surprisingly, I think, a country like China, which we hear so much about, is still really a fairly poor country in the global scheme of things. And all these numbers are what we would call purchasing power parity corrected, meaning we've taken account of the fact that things might be cheaper in Mexico than they are in the United States. So although China has grown tremendously and made tremendous economic progress over the last 20 years or so, it still is really a very poor country because it started as a very poor country, say in the early 80s. Now it's growing pretty rapidly. But these countries here, which I think no one would call Mexico a rich country, and once you sort of know the actual statistics, no one would call China a rich country, these countries here are actually sort of the middle class of the world economy. If we go down and look at countries that are less well off, think about if Mexico is about 1/3 of what's going on in the US, India is only a little bit less than 1/3 of what's going on in Mexico. And Mexico actually has itself an immigration issue. Countries to the south of Mexico in Central America, like Guatemala and El Salvador and Honduras, often have income ranges that are sort of in this $5,000 per head. So they're also about 1/3 of Mexico. And people want to migrate from those countries to Mexico. We can go ahead and go still lower and lower and lower, so that in the poorest countries of the world out there, we end up seeing GDP per capita $1,000 or a little bit less so. And I think most of us haven't traveled to countries that are that poor, and so it's really hard for us to fathom what that means. One thing is these differences in life expectancy. And a lot of the differences in life expectancy are basically because of high infant mortality rates. And in really, really poor countries out there, it's not uncommon, for instance, for about 1 in 10 or 1 in 3 children to die within the first year of life, because their access to clean water, for instance, is so poor, or because the incidence of diseases like malaria or HIV are so high. Okay. We can also sort of think about what's gone on in the U.S. historical perspective. If we sort of look back to where the U.S. was immediately after World War II, the U.S. was actually a fairly poor country at that time. If we look back and looked at what people were able to consume, the U.S. back then was less rich than Mexico is now. And if we go back even further, if we go back to the turn of the century, or the turn of the last century approximately, the U.S. was poorer than China is now. Of course, the other way of looking at that is that China has, within the scope of 30 or 40 years, jumped from where the U.S. was right after the Civil War to where the U.S. was after World War II, which is obviously a tremendous transformation. We go way, way back to after the American Revolution, and we could see that the U.S., was really not a wealthy country at that time. It may have been wealthy compared to other countries in the world, but basically this $1,500 per person is about as wealthy as you were going to get given the level of technology in 1820. And if you sort of do the math on this, what's happened over the last 185 years or something is that the U.S. has grown about 1.8% per year, which obviously is not a huge growth rate. GDP per head has only grown by 1.8% per year. But if you have 185 years for that 1.8% to add up, then that really starts to make a huge difference. So, key thing to remember here, for almost all of human history, GDP per head was down where the very poorest countries in the world are today. And yes, there would have been, nobles and priests and, the people in charge of building the pyramids and so on and so forth. But obviously those were a small fraction of world population. Anything like broad-based prosperity is only a very recent invention since the Industrial Revolution. And basically what happened was there were advances in technology, of course, over the course of human history, but if there was an advance in technology that made people more productive, then that led people to have more food, and when people had more food, they had more surviving children, and population grew, and as population grew, then the food per person went back down to that bare subsistence level. And this is what's called the Malthusian Model, named after one of the earliest economists, Malthus, who lived in the early 1800s. The ironic thing is, just as he was sort of discovering this and thinking this all through, it actually stopped being true just about that time. So one way of thinking about it is, what has happened over the course of human history? Well, what's happened over the course of human history is there's sort of some break-even or subsistence level of income, and they call this 1 here in this diagram. And that's the level of income we had at about 1800, level of income per person. When income was low, then of course what you're going to have is high death rates and slow population growth, if any, and gradually then technology will catch up with population and incomes will grow. But as incomes go above this subsistence rate, then population speeds up and drives income back down, and so on and so forth. And so we sort of fluctuate, incomes per head kind of fluctuate around this subsistence level. Populations actually grew in a sort of 2 steps forward, 1 step back. So that, say, for instance, if this is 500 BC, that's sort of before the Roman Empire really takes off. The Roman Empire expands and brings sort of a higher level of economic organization and more dense agriculture to areas in Northern Europe that hadn't had it. And then, eventually that collapses and sort of, what we would call civilization or higher levels of economic development gradually spread across different geographic areas of the earth, so the human population increases that way, and gradually the land is able to support a higher population density because people invent irrigation and things like that, but everyone is still living at that bare base subsistence level. And again, that all changes once we get to the Industrial Revolution sometime around 1800. The timing of the Industrial Revolution is actually something that scholars debate about in a sort of slightly pointless way, but I'll get to that in a second here. And then what happened here is, well, some countries had their industrial revolutions and they became very, very rich. And some countries haven't. And they've sort of lingered around at this subsistence level and may actually have experienced a decline in income because with modern medical technologies, the level of income needed to keep the population from shrinking is actually lower. With better medical technologies, people don't need as much food and so on and so forth to stay alive, because you can inoculate them against diseases and so on and so forth that they otherwise would have caught. We have a lot of data on the particular example of England. And, okay, thank you. What this chart is showing here is that for most of English history that we have data, which is roughly, after 900 AD, when population was relatively high, real wages, inflation-adjusted wages, were relatively low because labor was very plentiful, competition was very severe, there was very little land per person, so there was very little in terms of wages and food per person. In times when population was relatively low, like after the Black Death or something like that, then there was a lot of land per person and labor was scarcer and competition for jobs was less fierce and wages were higher. And so much of sort of the medieval and early Renaissance history of England is a story of sliding back and forth between, if we're immediately after like a major series of wars or a famine or a plague, we might be up in this section here with a small population and high wages, but then that causes population to grow until we eventually get into a situation of high population and low wages. And so we sort of slide back and forth between those two situations for a while, and then eventually, sometime starting in the mid-1600s, but at least definitely by the 1700s, we break out of this old pattern of just sliding back and forth there. So sometime in the late 1600s or by 1700, you can see that we're having both a higher level of population and a higher level of wages in a combination that we couldn't have before. And, at first maybe this is just some good luck. I think certainly by the time we get into the later 1700s, it's pretty clear that we're going off in a new direction here, and we have this sustained growth in both population and wages. So something really changed. Exactly when the change was, again, scholars can kind of debate, and some scholars prefer to see this as kind of a slow evolution out, rather than a definitive revolution, a real break at some point. Other people really want to concentrate on there being an important break at some point, say in the 1790s or something back here. So this 1830s, 1820s, 1800s, this would be 1790s. I myself am just a little bit more of like the evolutionary slow change. I think I would call this a slow acceleration, kind of a slow and uncertain acceleration, and then it sort of becomes a little bit stronger and less tentative in the late 1700s. So a couple of review questions here. What would we say about population growth and income growth before 1700? And what could we say about the quality of most people's lives before the Industrial Revolution? What could we say about people's incomes before the Industrial Revolution? So why am I going through all this? I'm going through all this essentially to make the point that really, when we think about economic development and what's going on in the world, sometimes people ask, why are some countries so poor? And I think that's a question that makes sense if you're living in a rich country. If you're living in a rich country, you take for granted that being rich is normal. But it's not normal. Being poor, being terribly grindingly poor, and having 10 to 30% of children die within their first year of life, and having most people be stunted because of malnutrition is normal. In a lot of medieval and lesser developed countries, we might see, for instance, that the average male height is about 5'3", and the average female height is about 5 foot, because people have experienced such high levels of chronic malnutrition throughout their childhood. And we might actually see that that kind of malnutrition chops about 10 to 20 points off someone's IQ. And I think those are just staggering realities that are hard for us to deal with. But really, that's the normal human condition. The normal human condition when people are living in subsistence agriculture societies is really, really, really poor. So, the real question, I think, is why are some countries so rich? Why did some countries manage to have this industrial revolution?